The rand has come down after it hit a 3-month high yesterday, and that's of course after the Reserve Bank's Monetary Policy Committee hiked interest rates just a little bit, but a significant move after a very long time. Let's see what's happening and sort of get a global investor perspective once more. Peter Montalto from Intellidex joins us. Peter, thank you from London. Just tell me, was the decision yesterday a good one?
Well, it depends who you're thinking about. For consumers, clearly this is going to weigh at the margin with credit costs going up. But good for depositors who will be getting more in terms of savings. And ultimately, the SARB has to find that balance between the two, and is why they ultimately decided to hike rates, thinking about the long-term negative impacts of inflation, which they seem to be getting more worried about.
There is a debate here, perhaps the Reserve Bank being a little paranoid, given that the rand is getting stronger, oil prices coming down. Are they not too obsessed about inflation?
Well, that's really the split across the MPC between the three hawks that voted to hike and the three doves that basically decided not to hike and to wait, and why they described heated debates going on inside the MPC. And I think the key thing is that the reason really that they're hiking is actually quite highly technical. It's an assumption basically that there is accommodative monetary policy, that the real repo rate is below where it should be, and that they can hike to remove this gap. But the hawks, I think, even if you really push them, actually would still say, yes, we are still in accommodative territory. Monetary policy overall, even though they're hiking, is actually still providing some support to the economy. That's a very difficult message to send to consumers in particular as rates are rising. But I think there is a very good, if highly technical reasons around why the hawks are doing this.
It makes us a little bit more attractive to investors. So initially the rand going up, but I guess we often see this coming down so quickly. So it's hard to please, isn't it, Peter?
Exactly. Well, I think it's interesting to consider what the sort of carry implications of this are. And as you mentioned, raising rates does actually theoretically help South Africa attract more foreign investment. But that only really happens in an environment where there is sort of excess global liquidity floating around. We have to remember that global external conditions are getting tighter. There isn't money really flowing into emerging markets at the moment. And so the SARB, I think, would not really have been hiking really to change the currency. They don't really like sort of doing that, trying to sort of target particular levels. And I think overall there won't be a huge amount of impact on the rand from this move.
Overall, I mean, wouldn't the Reserve Bank want a stronger currency that does help inflation? But the question is, I mean, can they do anything? Like you say, we're caught up in this global flux. We're not even talking about the trade wars and all the uncertainty right now.
Exactly. Well, theoretically, yes, you can say it would be much better if the currency would be here, and this is what the model says. The SARB does think it's slightly undervalued here, the currency, but not a massive sort of valuation mismatch that it would warrant them doing anything. And at the end of the day, as you say, there are so many other factors going on globally that the SARB trying not to do something would have very little impact and would end up burning a huge amount of money in terms of reserves, etc., and would end up being quite fruitless. And hence the SARB remains very risk averse on doing anything around the currency after getting their fingers burnt in the rand crisis in 2001, 2002.
Peter, from your perspective and the people you're working with, can you give us a sense of what investors think of South Africa right now in your part of the world? The IMF recently saying that a lot of that euphoria, it's gone. Is it gone for good?
Well, I think there's certainly a lot of disappointment, yes, that Ramaphosa basically has died. There's a lot of skepticism now over, say, some of the promises that were given at the M2BPS that the worst is now over in terms of revenue downgrades, things like that. But South Africa still is a least bad country, I think is the best way to put it. The current account is not huge. There is the lack of foreign borrowing in the South African system as a whole, lack of FX liabilities, unlike in Turkey. Reserve levels are okay. And so investors, I think, are frustrated by the lack of reform, and that's what really came through again in the IMF Article 4 mission statement. But not really huge alarm bells ringing at this point on core things like fiscal and growth. The problem is we can get tipped over the edge very quickly with things like SAA, like as.
Oh dear, and then we lose Peter Montalto from Intellidex talking about what's been raised by the IMF, the credit rating agencies, everybody looking at South Africa right now, the risk of those state-owned entities, including, of course, Eskom, warning about load shedding. So that was a global investor perspective. Let's move to entrepreneurs.